Welcome back. Oil prices under selling pressure once again after crude fell 9% last week with U.S. stockpiles at record levels. Joining us right now to talk all energy, special writer for the Wall Street Journal, Gregory Zuckerman. And Greg, it's good to see you.
Great to be here.
Thanks so much for joining us. Characterize what we're seeing in the oil markets right now. A big scare last week with prices coming down as much as they did.
Yeah, so for a month or two, even longer, actually, you can go back a year, we've had relative calm in the oil markets. And now people are nervous. Traders are concerned that there's too much production in the United States. The U.S. frackers are really ramping up. We got down to about 8.5 million barrels a day earlier this year, late last year, and now things are going over 9. People expect we're going to hit 10 million barrels a day by 2018. That'll be a record for us. So people worry about excess supply, and that's crushing prices.
So if you have too much supply, that's going to pressure prices lower. But you would think that lower prices is a good thing, isn't? And yet, when the equities all of a sudden have started focus on oil again, and equities trade down when oil is down. So riddle me that.
Yeah, so it happened a little bit last year as well. So the concern is that there are pockets of the economy and markets as well, especially high yield, where susceptible to lower energy prices. There are a lot of low investment grade energy producers that have troubles, could go under in an environment where oil keeps dropping. I personally kind of agree that it helps the consumer, it helps the U.S. economy overall. We're going to ramp up our production, but also our exports abroad. That can only help the dollar. So there are a lot of positives here as well.
The correlation last week, though, Greg, was not what it was 2 years ago in terms of oil in the stock market.
Yep. Yeah. Right. So there's just so much you want to be nervous right now, right?
I want to ask you, because you have a good sense on this. Somebody was making a lot of money last week. Was it hedge funds? I mean, who was short the oil market? The speculators were long it, they were dumping, so where was the money being made?
You know, historically, you look to CTAs and other kind of hedge funds. A lot of those guys have gotten out of the business. They've gotten burned over the years. They didn't see the tumble in prices of just over a year ago. So you don't see as many of those guys. You don't see Wall Street traders as much. The banks, the prop traders aren't there like they used to. They're still the big European trading houses. So I don't know if they were short or not, but they're still out there. But you don't see the traditional speculative player like you used to.
Yeah.
A good old-fashioned gas war in Texas, meanwhile. Lines of cars wrapped around Chevron and Texaco stations yesterday, where gas prices kept going until they hit 78 cents a barrel. That's pretty incredible.
Yeah, don't expect that anytime here. But what I found really fascinating is that in Texas is the key to this whole thing, the Permian Basin, which is just seeing production soar. And the key here is that production costs have come down. So they've been able to ramp up prices. Even at $50 a barrel, they're going to keep producing. So don't expect them to pull back as much as OPEC really wants them to. And guys like Harold Hamm, who aren't in Texas, he's the CEO of Continental Resources, he wants production to slow down, but he's ramping up like everybody else.
All right, we will leave it there. Greg, great to see you.
Sure, great to be here.
Thank you so much. Gregory Zuckerman, Wall Street Journal there.